As we mentioned earlier, investor optimism apparently is being driven by this hope that the Federal Reserve will lower its benchmark interest rate. But is it the right time to cut? Steve Liesman takes a look for us tonight.
A bullish stock market reaction to the Fed's announcement this week, suggesting a stock and bond market that are virtually certain the Fed will cut rates next month and even more beyond. There are reasons for the exuberance. 8 Fed officials forecast at least one cut, and 7 of them are forecasting 2. Fed Chair Jay Powell said the balance sheet runoff, that is the quantitative easing that it had been reversing, could end earlier. Powell also hinted at a possible full half-point cut instead of just a quarter. And that's the call of Morgan Stanley, which said in its Fed report, quote, a July rate cut of 50 basis points or half a point is coming. Downside risks from global growth and trade have dragged the Fed away from neutral. The Federal Market Committee will want to take an aggressive stance. But is the market too bullish? Rate cuts generally come with a weaker economy, and that could mean earnings disappointments. From the other side, there remains the possibility the cut never happens because the president strikes a trade deal with China and the economy turns out better than expected.
With the summit with Xi, I think it'll be a positive outcome. I think they both need a deal. They both need a success. I don't think the tariffs will go up on July 1. I think the employment report on July 5 will be fine. And I think that the second quarter GDP number will be fine.
And then there's the market level. Back in 1995, the Fed cut rates when, like today, stocks were at or near an all-time high. That worked out well as the economy and the Dow marched on for years to come. But it also cut rates near an all-time high in 2007. That ended poorly for both the economy and the stock market. So investors have to puzzle over whether the rate cut is coming, how much is coming, and if it does come, will it be enough for the economy? For Nightly Business Report, I'm Steve Liesman in Washington.